markets. The S&P was lower by 0.5%. Nasdaq deep under pressure, a 1% cut coming in. A FTSE DAX CAC mixed performance coming in from Europe as well. Just taking a look at how Asia has opened up this morning, if we could get some of those Asian indexes on screen. Mixed day of trade coming in for Asia too. Oil has taken a beating. Gold and silver have seen a quiet profit taking as well. Silver is lower by 3.5%. The metals, the base metals, are doing quite okay for themselves. We have Peter Cardillo, the chief market economist at Spartan Capital Securities LLC, joining us on the show. Peter, hi, good morning, and thank you for your time. Lots to talk about. First of all, the US Supreme Court has not ruled on the Trump tariff situation, so that uncertainty continues to prevail on the markets. On the flip side, we're seeing continuous profit taking on the US equity front. What is your take on where the US markets are expected to head from here, given the statements that we're hearing on Greenland every day, everything that's been happening in Iran, fresh new tariffs trickling in? Talk to us about where you're seeing the US markets.
Well, I think it's going to be a little bit of a bumpy ride. You know, we are in the fourth quarter earnings seasons have just begun, and we did get some numbers from about 6 of the major banks, which for the most part have beat expectations. But right now, the market is focusing on geopolitical concerns, and also another major concern that could send the markets lower next week if the ruling by the Supreme Court should favor the administration, that is giving power to President Trump to fire Lisa Cook, who is a member of the Fed. Now, if that were to happen, obviously that would bring a lot of uncertainties. And I think probably, you know, the most pressing concern right now is the fact that the Fed may lose its independence. And that certainly would not be good news for the markets, at least obviously for the bond market and equity markets as well.
Right, Peter, hi, this is Sumita here. Let me also ask you a question about, what you mentioned about, the U.S. Supreme Court's decision to sort of defer the decision by another week. What is it that markets are factoring in as of now? And are the markets factoring in a scenario wherein perhaps Donald Trump might also resort to some other measures to get the tariffs policy going?
Well, I mean, the administration has made it very clear that even if they lose the case on tariffs, that they have other vehicles, other ways of imposing them. So I'm not really sure that the market is all that much concerned about this particular case. As I said before, I think the market is very concerned over the outcome of the Trump versus Cook situation, and that would be very detrimental for the markets. And supposedly, the Supreme Court is going to take that up next week.
That's going to be an important event to watch out for, but we're getting fresh statements from President Donald Trump wherein he's saying that Zelensky is the main impediment in resolving the war. And this is what we're understanding, that he's also uncertain about Pahlavi's ability to lead Iran. Pahlavi is Mohammad Reza Pahlavi, the former Shah of Iran. So yes, that's the statement coming in from Trump this morning. And in fact, he also expects to visit Venezuela soon. So lots is happening on that front. Peter, talk to us about how this geopolitical development is shaping up right now. Trump has declared himself the head of Venezuela. That's quite autocratic in nature. Talk to us about how that oil trade is going to pan out for US. What difference is it going to make to the global crude prices, if you have any take on that?
Well, right now we saw a rally in crude oil prices, nothing really significant. But crude oil prices did rise above that 60 level, almost 661, and that's all not necessary. That's certainly not tied in with Venezuela, but it's certainly tied in with the Iranian situation. And in fact, President Trump indicated that he probably could wait on taking any action against Iran. And we saw that the price of oil, we're seeing that now, that the price of oil is actually coming in off of that higher level. The real fear here is if there should be some sort of military intervention and Iran retaliates. Now, how could they retaliate? Well, they could close the Straits of Hormuz, and that would put a temporary upward pressure on oil prices. But I'm convinced that whatever happens is going to be very short-lived. And I don't think that we're headed for much higher prices in oil. And I think, the fact that President Trump has said that we're going to be getting a lot of oil from Venezuela, et cetera, that means a lot more supplies coming to the market. And that means that the imbalance between supply and demand is likely to continue and to depress oil prices.
Right, Mr. Cardinal. And of course, how that Iran situation really pans out, that remains to be seen. And who's going to be the number two in case the Ayatollah Ali Khamenei, that regime falls, that remains to be seen. But definitely, we've spoken to experts and they suggest that it's going to be long protracted, given the fact that the geographical placement of Iran, it actually favors the country. But let me also ask you, how should investors then move on with their investing strategy in terms of how their monies should be parked?
Well, I think at this point, with all these geopolitical problems that we have, you need to stay in the market because I think the fundamentals of the market are not going to change. I think the earnings season is going to support the valuations that we presently have, but that doesn't mean it's not going to be a bumpy ride. And that bumpy ride means that we could be headed for volatility. That volatility is likely to increase until the geopolitical problems are either settled or at least cool down for a while. So you need to be invested, but you also need to be very cautious. And so that means you should be a certain amount of your asset allocation should be in some sort of a hedge. And the best hedge to do it with is obviously owning a certain amount of gold.
Okay, so Peter, that's your take on what the investment strategy could be. Let's talk about equities in Asia, just shifting focus from the US. Talk to us about how you're seeing the Nikkei pan out. We've seen quite the volatility over there. Of course, their policy outcome is also going to be very important to watch out for in the months to come. But talk to us about where you're seeing the Asian indices heading from here.
Well, I think, they'll continue to rally. I mean, Nikkei has done quite well. And I think that if we look at some of the Asian markets, they'll do well. And I think India is going to do well. So again, they're pretty much intertwined. So that means if we get, a nervous market here in the States, that's not going to exclude the fact that other global markets are not going to follow us. So it's just a question of not necessarily of an individual fundamental basis, but rather on a global fear factor. So again, if the U.S. markets were to fall apart, you can rest assured that the global markets will follow suit.
All right, Mr. Carlo, thank you very much for taking the time out and speaking to us here on ET Now on all that's been transpiring, not just in the global markets as well, but Asian equities as well. Thanks very much once again for taking the time out. On that note, ladies and gentlemen, it's a wrap on this edition. Do stay tuned to ET Now for more news and updates coming up on the other side. Thank you very much for staying tuned.